Yesterday morning, I listened to Google's earnings call and then made some purchases accordingly because Wall Street got it wrong. They didn't understand what Google is doing and how they're moving forward. And Google presented me an opportunity to buy at a lower price. And I think I'll be able to buy again in tomorrow when Amazon does its earnings call, because I think Google will go down a little further. But today I listened to Facebook, or Meta's, earnings call. And again, Wall Street got it wrong. There were some comments that were made that they misinterpreted or put too much emphasis on. And I just wanted to share with you, if you didn't listen to it, their earnings or their revenues from third quarter 22 to third quarter 23 are up 21%. And their income from third quarter 22 to third quarter 23 is up 263%. And yet, Facebook is down 6% this morning. Does that make any sense? I know that the CEO made some comment about that they could have some negative effects in fourth quarter as a result of the conflict in Israel. They may not get the advertising revenues that they would like, but nonetheless, that's an event, and it will pass. And Meta, if you'll invest an hour and listen to this call, you'll see that Meta is going after this AI totally differently than everybody else. And I think they just are hitting a home run. Let's get into it. I want to share my observations and my thoughts, and maybe you and I can make some big money off of Meta.
Best of Us Investors presents Kerry Griegmeyer.
As I said, their revenues were up 21%. Their expenses are down 7%. Their income is up 263% quarter to quarter. So everything is going extremely well. This past quarter, they spent $6.8 billion on rebuilding their servers and their data centers. To give you some representation, that's about 50% of their income they spent on rebuilding their infrastructure. That's why the Bus 12 and the Bus 13 portfolios are going to be so strong once we get past these interest rate hikes and the money starts flowing. To give you a comparison, Google spent $8 billion. Again, Facebook spent $6.8 billion. Google spent 40% of their income, and Facebook or Meta spent 50%. So we see some heavy CapEx, capital expenditures on both parts of these companies to upgrade their infrastructure, their data centers. They've changed the architecture of their data centers. Susan Lai gets into it. She is a sharp woman. Again, listen to this call. It is really fantastic. Also in the past quarter, their cash on hand, free cash flow, is up to $61 billion. That's up from $24 billion. That's right, $61 billion on cash. If you look at my financial analysis from prior to this release, their cash on hand was $24 billion. It's now up to $61. They've reduced their debt from $36 billion to $18 billion. Why is this important? Because debt is costing so much more because of raising interest rates. So I'm very impressed what I'm seeing here from Meta. Mark Zuckerberg is a smart dude. As far as capital expenditures, and again, this is upgrading their infrastructure, as well as they're going to be hiring more people. They're anticipating the CapEx will go from $89 billion to maybe as high as $99 billion over the year. So they are making a tremendous expenditure into AI. I want to take about 2 minutes of your time, and I want you to listen to the last comment in this call by Mark Zuckerberg. He goes into detail and summarizes his feelings of how Meta is approaching AI as opposed to all the other tech companies. And if you'll listen to it carefully and maybe roll it back and hear it a second time, you're going to see that what I believe is one of the leading companies. It's probably going to be Google, Meta, and Microsoft. But listen to what Mark says, roll it back, listen to it another time, and you'll see this guy's on top of this.
Yeah, sure. In terms of how big this is going to be, it's hard to predict, because I don't think that anyone has built what we're building here. There are some analogies like, what OpenAI is doing with ChatGPT, but that's pretty different from what we're trying to do. Maybe the Meta AI part of what we're doing overlaps with the type of work that they're doing, but the AI characters piece, there's a consumer part of that, there's a business part, there's a creators part. I'm just not sure that anyone else is doing this. And, when we were working on things like stories and reels, there were some market precedents before that. Here, there's technology, which is extremely exciting. But I think part of what, leading in an area and developing a new thing means is that you don't quite know how big it's going to be. But what I'd predict is that I do think that the fundamental technology around generative AI is going to transform meaningfully how people use each of the different apps that we build. I think, for the feed apps, I think that over time, more of the content that people consume is going to be either generated or edited by AI. Some of it will be, creators will now have all these tools to make content more easily and more fun. And I think over time, maybe we'll even get to the point where we can just generate content directly for people based on what they might be interested in. I think that could be really compelling. On the messaging side, I think that the way that we're looking at these AIs kind of ties into that directly, where you'll be able to message with Meta AI or any of these different AIs for whether it's for fun, you have a question about something, you want help doing something, you want to play a game, or you want to message with a business for commerce, or you want to engage with your favorite creator and they wouldn't normally otherwise have time to message you back, but now they have an AI representing them that can, and that will accrue to messaging behavior. It's going to change advertising in a big way. It's going to make it so much easier to run ads. Businesses that basically before would have had to create their own creative or images now won't have to do that. They'll be able to test more versions of creative, whether it's images or eventually video or text. I think that's really exciting, especially when paired with the recommendation AI. On the hardware side, obviously the smart glasses that we just rolled out, we sort of thought were a precursor to eventually getting to displays and holograms for augmented reality, and I think we will eventually get there still. It's not that far off, but I think that now the ability to deliver AI through smart glasses may end up being a killer use case for that even before you get to the kind of augmented reality type of use cases. So I think you're basically seeing that there are going to be, this is a very broad and exciting technology. And, frankly, I think that this is partially why working in the technology industry is so awesome, right? Is that every once in a while something comes along like this that changes everything and just makes everything a lot better. And your ability to just be creative and kind of rethink the things that you're doing to be better for all the people you serve. I just think that's a lot of what is energizing and fun around building companies like this. But yeah, it's hard, sitting here now to be able to predict what the metrics are going to be around what the balance of messaging between AIs and people, or what the balance in feeds between AI content and people content or anything like that. But I'm highly confident that this is going to be a thing, and I think it's worth investing in. To the question about efficiency and costs, I think initially it's most important to focus on getting to product market fit. And we obviously care a lot about efficiency, right? The CapEx costs for our company are very significant, and it's one of the main things that weighs on the economic model of the company. So on the one hand, as we can improve the efficiency, we're able to do things like train bigger models and serve more people, which currently right now we're going to be bottlenecked on based on the amount of infrastructure that we have if this gets to the scales that we aspire to get to. So in the near term, the efficiency wins will primarily just be to deliver better products to more people. But over time, we're going to continue working on that. And I think we've been able to do pretty good work on efficiency on our hardware and compute. And, over the long term, once we kind of have more of an understanding about what these products want to be, then we'll be able to drive the economic model based on that. But we'll work on that all throughout. But I think we're still in the pretty early part of that curve.
Let me tell you what my takeaways are from what I just heard there. First of all, I didn't understand or know how many apps they have, whether it be, I don't use WhatsApp, they have Quest 3, they have their Ray-Ban Meta glasses, they have Llama 2, AI Studio, Emu, Creator AI. The Creator AI kind of intrigues me. What he basically said that I would have an AI assistant that was brought to me by Meta, and I could sit down to that AI assistant and say, hey, I want to make a video on Meta's earnings call, and I want you to review the earnings call, pull out the meat and potatoes of it, and then interject my avatar into it and create that video for me. That's what he's talking about. And then how can that apply to you? Well, maybe you want to create a video to send to your children for Christmas, and you have some pictures that you want to share from your travel over the past year. So you'll go to your AI assistant and say, create a video around our vacation that we had in Europe, and then the time that we went skiing, and create a video to send to all of our friends. Go to my email list and pick out those that are I have talked to at least 5 times or emailed at least 5 times, and send it to them and create that for me, and then give it back to me so I can go through the list and see it, and it will do it. And Mark will bring that to you. Then he talks about you'll be wearing glasses, Ray-Ban glasses, and you will say, who's the 5th president of the United States? And it'll show up on your glasses. And if you want then to ask it further questions, you'll just speak, and it will speak back to you in your ear. That's part of what he's building. And you will have an AI assistant. So you're walking down the street in downtown Birmingham, and you're saying, I'm getting a little hungry. We're in the mood for some unique Mexican food, some real Mexican food. Where should I go to get it? And your glasses will talk back to you and tell you. And you say, well, I'm not really familiar with, can you give me directions? And as you walk, your glasses will tell you where to turn and how to get to exactly where you're going. This happens to me when I go to cities I don't know. I'd love to have a pair of glasses that kept me from getting lost, okay? So this is what is happening. And what Mark is saying is this: we're going to have this not only just ChatGPT and Bard, we're going to deliver it to you for whatever you do. So my takeaway is this dude's on top of this. He's got some very smart people around him. In the call, they ask him some questions about why he uses the open platform rather than keeping everything to himself. And he basically says, we get better people that way. We can, if we go to an engineer and we say, well, we don't want you just to build work for us, Meta, we want it open sourced so you can change the world. That's what he says. So that's why they get super talented people, because they have the ability to change the world. So I bought some more. I saw Meta go down this morning, 6%. I bought into it. About 25 shares. I think that there will be some additional big tech companies that will not have the reports, at least how Wall Street is interpreting, and I think Meta will go down again. So on my cheat sheet, I have created, it's on my website, I have created a buy-in price for every stock that I have in my Bus 12 and Bus 13, and then I've also done it for every stock in the Dow. And what I do there is I take my financial analysis and say, how strong are they? What is the effects of the interest rates going to be on them? And then I use Mark's teachings from our swing trading platform, and I look at their charts, and I find their support levels. That's how I determine determined the price I bought my 25 shares of Meta this morning. And oh, by the way, I also bought some Google because they're down a bit more. And I will buy more as the fear comes to this market, as the pressure of higher cost of debt comes to this market. I'm buying in to the bus 12 and bus 13. And I just want to emphasize again, if you listened to Google, if you listened to Meta, Google said they spent, what was it, $8 billion last quarter on rebuilding their infrastructure. And Meta said they spent $6.8 billion on building their infrastructure. What does that mean? They're buying super macro computers for their data centers so that they can handle all this AI. They're buying the switches and the relays that go into those computers from all the other bus 12 and bus 13 companies. That's what's happening. Now, you've got to be careful because some of these companies aren't really financially strong. So you got to let them work through the high interest rates. But once those interest rates start coming down, the money's going to start flowing again. And we're going to be sitting at the investment opportunity of the world. Listen to the earnings calls of these companies, and you'll learn more than what they do on Wall Street because they don't listen to them. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I think I can lead you down a path to make some money in what is going to be the biggest thrust upward in the stock market in your lifetime.